Today on the show, we question how long will the bear market last and what is going to be the bottom? And even if you don't know the bottom, how should you, the investor, tackle the bear market? Kranti Vatini will be joining us on the show today. You're watching Morning Brief at 9. This is Morning Brief at 9 right here on News 9. First up, let's look at the global headlines in news this morning. Germany's conservatives win national election, but far-right AfD surges to historic second place with a 20% seat count, leaving Friedrich Merz facing a tough coalition battle. Leader of Germany's far-right AfD celebrates historic election result as party secures its best ever finish in national vote. Meanwhile, incumbent German Chancellor Olaf Scholz calls German election loss bitter, takes responsibility for SPD's defeat and rules out cooperation with the far-right Alternative for Germany. Meanwhile, over the weekend in the US, Elon Musk orders US federal employees to submit weekly work reports or face resignation, sparking controversy and legal questions amid Trump's push for deeper government cuts. US President Donald Trump urges Putin and Zelensky to negotiate peace as Russia shows willingness to make a deal, but Ukraine remains sidelined from key talks. Ukraine's President Volodymyr Zelensky says he is willing to step down if it brings peace, suggests trading his departure for NATO membership. Donald Trump has fired the Joint Chiefs Chairman C.Q. Brown in historic military shakeup, nominates retired Lieutenant General Dan Kane as his successor. And there's no end to tariff threats. Donald Trump has threatened 150% tariff on BRICS nations over dollar challenge as Brazil vows retaliation and South Korea seeks trade exemptions. Meanwhile, in corporate America, Meta approves a 200% executive bonus increase just days after laying off 3,600 employees, citing competitive compensation needs. All these stories and more right here on Morning Brief at 9. But first up, let's look at the elections, the snap elections in Germany. Germany's conservatives have clinched victory in the national election, but it's far from a smooth ride ahead. A split vote helped the far-right Alternative for Germany to its best ever results, securing second place. Now, Conservative leader Friedrich Merz faces a daunting challenge, working through coalition talks to form a stable government. Can he pull it off, or is Germany heading for a political deadlock? Here's more.
The conservative Christian Democrats won Germany's national election on Sunday, putting leader Friedrich Merz, who has no prior experience in office, on track to become chancellor of Europe's largest economy. And in a historic showing, the far-right Alternative for Germany, or AfD, won roughly 20% of the vote, marking the first time since World War II that a far-right party has come in second in a German national election. Chancellor Olaf Scholz's Social Democrats tumbled to third, his party's worst showing since the Second World War. Merz inherits an ailing economy, a society split over migration, and a country whose security is caught between a confrontational U.S. and an assertive Russia and China. His victory capped a campaign season roiled by a series of violent attacks and interventions by members of the U.S. Trump administration. They included Vice President J.D. Vance and tech billionaire Elon Musk, who showed forceful solidarity for the anti-migrant AfD, which has also criticized Germany's culture of Holocaust remembrance. Merz, who has shifted conservatives to the right, conditionally supports equipping Ukraine with longer-range Taurus missiles and sees Europe as firmly anchored in NATO. But he is heading into what are likely to be lengthy coalition talks without a strong negotiating hand. While his CDU and CSU sister party in Bavaria emerged as the largest bloc, it scored its second worst post-war result. It remains unclear whether Merz will need one or two partners to form a majority, but a three-way coalition would likely be much more unwieldy, hampering Germany's ability to show clear leadership. All of the mainstream parties have ruled out working with the AfD. That could leave outgoing Chancellor Scholz in a caretaker role for months, delaying urgently needed policies to revive Europe's largest economy after 2 consecutive years of contraction, and as companies struggle against global rivals. It would also create a leadership vacuum in the heart of Europe, even as it deals with a host of challenges, including Trump's threat of a trade war and attempt to fast-track a ceasefire deal for Ukraine without European involvement. Trump on social media Sunday hailed the election result as a, quote, great day for Germany, saying that its citizens, quote, got tired of the no common sense agenda, especially on energy and immigration.
Now, while Germany's opposition conservatives won the national election on Sunday, putting leader Friedrich Merz on a track to be the next chancellor, the far-right AfD, or Alternative for Germany, came in second on its best ever result following a campaign roiled by a series of violent attacks and interventions by US President Donald Trump's administration. The Conservative bloc won 28.7% of the vote, followed by the AfD with 19.8%. Listen to what the leader of Germany's far-right AfD, Alice Weidel, had to say.
Wir haben ein historisches Ergebnis eingefahren.
We have achieved a historic result. We have never been stronger in the federal government. We have become the second strongest force as Alternative for Germany. And we have now firmly established ourselves as a People's Party.
Und ich muss eins sagen, unsere Hand.
And I have to say one thing. Our hand will always be outstretched for government participation, to implement the will of the people, the will of Germany. We are ready to participate in government. Our hand is always outstretched to implement the will of the people.
Immer ausgestreckt, den Willen des Volkes umzusetzen.
Well, Alice Weidel talking about the will of the people. Meanwhile, incumbent German Chancellor and Social Democratic Party candidate Olaf Scholz admitted defeat, calling his party's election loss bitter and saying he takes full responsibility. Speaking after yesterday's result, Scholz acknowledged that the SDP had performed better in the last election under his leadership, but fell short this time around. Listen in.
Last
time, the election result was better and I had responsibility for that. This time, the election result is bad, and so I also bear responsibility for this result. I would like to say that at this point. For me, therefore, you and the CDU chairman Friedrich Merz from here on the mandate to form the next government. Congratulations on the election result. No cooperation with the extreme right. The Social Democratic Party stands by this clear course, and we hope and believe that all others will continue to show this attitude in the coming years.
Outgoing German Chancellor Olaf Scholz there. But moving on to the US, Elon Musk, the head of the Department of Government Efficiency, or DOGE, under US President Donald Trump, has ordered all federal employees to submit a report detailing their work from the past week by today, Monday, and if they don't comply, it would be considered a resignation. Emails titled, "What did you do last week?" have already been sent to workers across key agencies, sparking outrage among employees and unions. Musk's post came just hours after Donald Trump posted on his own social media network, Truth Social, that DOGE should get more aggressive in its attempts to downsize and reshape the federal workspace. Remember, Musk's Department of Government Efficiency, or DOGE, an entity created by Trump, has swept across federal government agencies, firing tens of thousands of federal government workers, from scientists to park rangers, mostly those on probation. Meanwhile, US President Donald Trump is ramping up efforts to bring peace in Ukraine as he urged Russian President Vladimir Putin as well as Ukrainian President Volodymyr Zelensky to work together, suggesting that Russia is open to a deal. Trump has been pushing for a swift end to the war and has held separate calls with both leaders. Meanwhile, his top officials recently met with Russian counterparts in Saudi Arabia, but notably, Ukraine was not part of those talks. Take a look.
I think that President Putin and President Zelensky are going to have to get together because you know what? We want to stop killing millions of people. You have young soldiers being killed. If you saw the pictures that I saw of the battlefield from satellite, you've never seen any pictures like that. I want to see a ceasefire and I want to get the deal done. I think we have a chance to get the deal done. I had to make sure that Russia wanted to do it. It's a war that would have never happened if I was president, but it did happen. We're spending our treasure. They're spending their blood. They are. And they're very brave in every way you can imagine. But we are spending our treasure on a country that's very, very far away. And it's okay. But we have to be treated the same as Europe is being treated. Europe gets their money back. Europe is basically giving nothing because they get it back in the form of a loan, and it's a guaranteed loan. We don't get our money back, and we're losing. I mean, we don't want to do that anymore. So we're signing an agreement, hopefully in the next fairly short period of time, that will assure us that we'll get $400 or $500 billion back. We're in there for $300 billion.
How close are you to striking a minerals deal?
I think we're pretty
Ukraine?
close. Yeah, I think they want it. And they feel good about it, and it's significant. It's
Donald Trump there saying that a deal is pretty close. Meanwhile, Ukraine's President Volodymyr Zelensky said that he's willing to step down if it brings peace to Ukraine. Speaking on Sunday, Zelensky also made a remark that he could trade his departure for Ukraine's entry into NATO. Listen in.
If
it's about peace in Ukraine and you really want me to leave my position, I am ready to do that. Secondly, I can exchange it for NATO if there is such an opportunity. I'll do it immediately without a long conversation about it. I am focused on Ukraine's security today and not in 20 years. I don't plan to be in power for decades. Therefore, that's my aim and my dream.
And there's been a major shake-up in the US military leadership as President Donald Trump has fired the chairman of the Joint Chiefs of Staff, Air Force General C.Q. Brown, and removed 5 other top military officials. The unprecedented move is raising questions about stability at the Pentagon and what it means for America's defense strategy. So what's behind these sudden changes? This report tells you all.
I have not seen any.
President Donald Trump fired Air Force General C.Q. Brown on Friday in an unprecedented shake-up of U.S. military leadership.
We addressed our force.
Trump said in a post on Truth Social that he would nominate former Lieutenant General Dan Raisin Kane to succeed Brown. It's the first time someone has been pulled out of retirement to become the top military officer. Brown, the second black officer to become the president's top uniformed military advisor, was serving a 4-year term meant to end in September 2027.
Military leaders.
A US official said Brown was relieved with immediate effect before the Senate confirms his successor. Democratic lawmakers have condemned Republican Trump's decision to remove the US general. The Pentagon says the president will also replace the head of the US Navy, Admiral Lisa Franchetti, as well as the Air Force Vice Chief of Staff. He is also removing the Judge Advocates General for the Army, Navy and Air Force. It's unclear whom the Trump administration will pick to fill those positions.
your country first.
Trump's decision sets off a period of upheaval at the Pentagon, which was already bracing for mass firings of civilian staff. The uniformed members of the US Armed Forces are meant to be apolitical, carrying out the policies of Democratic and Republican administrations.
And it's the start of another week and another tariff threat as US President Donald Trump has once again issued a strong warning to BRICS nations, which is Brazil, Russia, India, China, South Africa, saying that they could face tariffs as high as 150% for what he calls attempts to undermine the US dollar. His remarks have sent shockwaves through the global markets, with countries scrambling to respond. Meanwhile, South Korea has formally requested an exemption from US tariffs on steel and other goods as trade tensions continue to escalate. Take a look.
Donald Trump turned his sights on another set of targets Thursday. Speaking in Washington, he had a warning for the so-called BRICS countries, a group of developing nations founded by Brazil, Russia, India and China.
They said, sir, what about the BRIC states? They're going to take over the dollar, the sanctity of the dollar. They're going to create a new currency to rule the world. I said, no, they're not. They said, yes, they are, sir. They said it. I said, no, they're not. Tell them 150% tariff, plus we're not going to do business with them.
The BRICS countries really had been exploring the creation of a common currency. But last week, Brazilian officials said the idea was dead and had never got as far as technical discussions, though it wasn't clear if that had any connection to previous Trump threats on the subject. Brazilian President Lula da Silva gave his own take on Trump's tariffs on Thursday. He said Brazil would match any new US duties and accused Trump of trying to become the emperor of the world. Meanwhile, other countries are scrabbling for a response to Washington's moves on trade. South Korea says it has requested an exemption from US levies on steel and other goods. Deputy Trade Minister Park Jong-won said that was only fair, as most tariffs between the nations had been eliminated under their free trade agreement. On a visit to Washington, he met Congress members to press the country's case. Japan's trade minister also says he's hoping to head to Washington for talks.
Meanwhile, Wall Street took a hit on Friday as US stocks stumbled, extending their recent sell-off. Investors reacted to disappointing economic reports and growing concerns over weakening consumer demand. Tech giants weren't spared, as well as shares of Nvidia, Google parent Alphabet and Amazon all slid, dragging the market further into red. Take a look at the US markets, and the impact on Indian markets is coming up next.
U.S. stocks tumbled on Friday, extending their recent sell-off, with the Dow and S&P 500 closing down about 1.7% each, and the tech-heavy Nasdaq declining more than 2%. Economic data out Friday showed U.S. business activity decelerating and consumer sentiment deteriorating, with survey participants expressing an increasingly gloomy outlook in the face of economic unknowns. Sectors that are economically sensitive, like transportation, chips, and housing, slid more than 2%, and mega-cap technology stocks including Nvidia, Google parent Alphabet, and Amazon all fell. The downbeat market result didn't surprise or concern Ross Mayfield, investment strategist with Baird.
Today you get flash PMIs that show maybe the economy is a little bit weaker than investors anticipated, particularly on the services side of the economy, which has been a big driver of growth. And that's all it took. Markets reacted a little bit negatively, a little bit of whiff or fear of stagflation again, with inflation remaining steady and some of these growth metrics coming in a little soft, retail sales in January as well. So on the whole, nothing too bad, but when the market is at an all-time high and valuations are stretched, it's enough to send things lower.
Stocks on the move included United Health, which dropped 7%, following a Wall Street Journal report that the Department of Justice has launched an investigation into the health insurer's Medicare billing practices. Shares of Block plunged more than 17.5% after the payment firm's fourth quarter profit fell short of estimates. And shares of Tesla fell more than 4.5% after the automaker announced a recall of 376,000 vehicles due to a power steering problem.
All right, and the impact of the US markets is seen early morning Monday on the Indian stock markets, as well as the index. The Nifty 50 has opened almost completely in the red. It was completely in the red, but some stocks are now showing a little bit of a green tinge, including Bajaj Finserv, Maruti Suzuki, Sun Pharma and Nestle India. Apart from that, the IT stocks are taking a massive beating on the Wall Street. TCS is down 1.1%. Nifty also down over 1%. HCL Tech down about 1.5%. All this coming on the back of inflation in the US remaining sticky and no likelihood of business revival, especially for IT companies. Meanwhile, even the banking sector has taken a beating. HDFC Bank is down about 1.3%. SBI is also down almost a percentage point in early trade this morning. We will bring you the mood check now. Let's look at where the benchmark indices are this morning. Let's look at Nifty 50 and Sensex, the key benchmark indices. 5 minutes into market open, Nifty 50 down about 0.73%, struggling to hold at 23,630 odd levels. Meanwhile, Sensex also down about 0.6%, just below the 74,850 mark. Volatility continues to be high in the markets at 15.5. Meanwhile, the small cap and the mid cap taking a massive beating. Small cap is down 1.4% in trade this morning. Nifty mid cap also down 1.2%. Of course, we will bring you these and more with Kranti Batini later on the show. But for now, let's continue with what is happening in the US. Let's take a look at the next story that we are bringing to you. And this one comes from Trump's shifting stance on Ukraine and latest tariff threats to Nvidia's earnings. The AI race to how Germany's elections could shape its struggling economy. We give you a look at the top stories to watch out for in the US this week.
From Trump's rhetorical shift on Ukraine to Nvidia's first results since the emergence of DeepSeek, these are the stories to watch in business and finance in the coming week. 3 years after Russia launched a full-scale invasion, Ukraine is at an inflection point. Investor confidence that a U.S. President Trump-led ceasefire would boost Ukraine's economic prospects prompted a stunning rally in its bonds, with GDP-linked warrants briefly at their highest since early 2022. But an equally stunning rhetorical shift from Trump has alarmed Europe. He now calls Ukraine's president a dictator, cut him out of U.S. talks with Russia aimed at reaching a peace deal, and told Europe it must foot the bill for Ukraine going forward, while also demanding compensation for past U.S. support. Markets are focused on what the next German government will do to boost an economy that has flatlined after years of underinvestment. The question is whether Germany reforms its debt brake, with U.S. tariffs looming and defense spending gaining urgency. Investors reckon any change will be limited. Chipmaker Nvidia reports quarterly results on Wednesday. It'll be the first time since the emergence of DeepSeek's low-cost AI model. Nvidia suffered a record one-day loss in market value last month, but shares have mostly bounced back. The company's report will test that rebound, as well as the market leadership of the Magnificent Seven megacaps. Trump will almost definitely make headlines next week with more tariff threats. But the question is whether traders will be listening. The answer? Not really. State Street found that in November, 40% of all equity market volatility could be explained by the trade war narrative. Now, it's near 2%. Investors say the shift is due to perceptions of a growing gap in what Trump threatens and what he actually does.
All right, staying with corporate action in the US just a week after cutting 3,600 jobs, Facebook and WhatsApp Instagram owner Meta is handing out massive bonuses to its top executives. A corporate filing revealed that Meta has increased effective bonuses to 200% of their base salary, more than double the previous rate. The decision, approved on February 13th by Meta's compensation committee, excludes CEO Mark Zuckerberg. Meta's board defended the bonus hike, stating that executive pay was lagging behind industry peers. Before the increase, total cash compensation for Meta's top executives ranked or below 15th percentile compared to similar roles at rival companies. Now, with the new 200% bonus structure, Meta said its executive compensation now aligns with the 50th percentile of its peer group. The company argued that the move is necessary to remain competitive in attracting and retaining top leadership. U.S. health insurance company United Health is under federal scrutiny. The U.S. Justice Department has reportedly launched a probe into Wall Street Journal. The investigation has spooked investors, sending United Health shares tumbling as low as 13%. Take a look.
Shares of United Health fell as much as 13% Friday morning after a report that the U.S. Justice Department has launched an investigation into the company's Medicare billing practices in recent months. The report from the Wall Street Journal said the civil fraud investigation is examining the company's practices for recording diagnoses that trigger extra payments to its Medicare Advantage plans. In a statement, United Health said the report contained misinformation about its Medicare Advantage plans, pointing to regular reviews by the government to ensure compliance. It also said it was unaware of the launch of any new activity by the Department of Justice. The DOJ did not immediately respond to Reuters' requests for comment. Shares of other health insurers such as Humana and CVS Health also fell in early trading, as the report underscored growing scrutiny into the health insurance sector. United Health's margins are already under pressure from rising medical costs in its insurance business. It is also dealing with consumer frustrations with navigating the U.S. insurance system that were sparked by the killing of Brian Thompson, the former CEO of its insurance business, on December 4th. The suspect, Luigi Mangione, was due back in court Friday on New York State murder and terrorism charges.
Well, time for a short break here on Morning Brief at 9. But coming up on the other side, how should you as an investor tackle what seems to be a bear run on the Indian markets? Kranti Batini will be joining us after this very short break.
Greatest in the world. Focus, wisdom, composure. But there is one thing which truly sets you apart. Your inner strength. So did TMT Reebok. True inner strength.
मैं और आप कोई फर्क नहीं है हमें।
6 leader of the last ball.
जब ताक लेते हैं अपनी मंजिल को तो उसे पाने के लिए कमर तोड़ मेहनत करते हैं। पर कभी-कभी मेहनत और मंजिल के बीच
हाउस इज नॉट इन योर बजट सर, सॉरी,
रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
Crime will never go out of the society.
Crime is a part there.
We do know people who have shot people. We do know people who are criminals. They are real people. They are good, bad, ugly, everything is within us.
For me, particularly me, Zishan Ghazri, yes, I have born and brought up in Wasipur.
Characters of the darker side are also human beings in society.
People there don't realize it's crime. They think it's a part of the life.
When these two words collide, it sort of creates a magical surrealism. So there is a good side, there's no black, so they are clearly grey.
Culture of that area, Dhanbad, is crime is part.
This and more streaming on News 9 Plus. Download now.
Welcome back. You're watching Morning Brief at 9. I'm Karthik Malhotra and this is News 9. The Indian stock markets have opened in the red once again, and what a sea of red it has been. First, let's look at the mood of the market as it opened just a few minutes back at 9:20 a.m. This is what the mood of the market was. Look at the beating that the small caps and the mid caps have taken this morning. Nifty small cap is down almost 2% at about 15,327 points or so. Bad news coming from the mid-cap space as well. Nifty mid-cap is down at about 1.7% this morning. This is the latest at 9:30 a.m. just a minute or two ago. And the Nifty 50 and Sensex both down about 0.7%, 0.8% or so. This is bad news. Nifty 50 struggling to hold the 22,600 levels. Remember, Last week when we were bringing the show to you, the new support that we were looking at for Nifty 50 was at about 22,850. Nifty is down about 200 points or so from there. Let's look at the Nifty 50 heat map this morning, and it seems to be a sea of red. Pretty much every sector underperforming this morning. The biggest hit coming from the IT space. Remember, the data that came out from the US inflation print seems that inflation is likely to stick, and that means potentially fewer rate cuts by the US Fed. Now that is something which is bound to impact India's IT sector's order book, and that is visible on the stocks today. HCL Tech is down about 2.5% in early trade. TCS, Infosys, both down about 1.5% and 1.25% or so. Slight recovery in Mahindra & Mahindra. Remember, this stock had taken a massive beating after there were news reports of Tesla driving in its electric vehicles in the country. The stock has recovered just slightly, but well below its highs that it has seen earlier. You know, the banking sector is taking a beating this morning. HDFC Bank is down about 1.5%. Again, this seems to be some sort of a reaction to the US stock markets and the fact that the US Fed, given high inflation, may not be cutting interest rates. So even the banking stocks seem to be spooky this morning. Well, let's give you a little bit of context on how India and Indian investors have actually been dealing with the stock markets, and we really question how much will Indian stock markets and the investors continue to feel the pain of what's happening right now. To give you context, Indian equity markets as of last week were already down about 13% from their highs in September. Remember, 27th September is when markets had touched their all-time high, and markets till last week, not counting today's dip of another 0.8% or so, markets have been down about 13%. Now, just this year alone, from the 1st of Jan, Sensex has crashed over 3%. Now, today's data notwithstanding, we are looking at a further downside. Meanwhile, the small cap and mid cap stocks have been the worst hit. They've lost more than 20% of their value. Now, how much has the loss to investors accrued? Well, 45 lakh crore rupees on BSE stocks alone has been the kind of wealth erosion for this calendar year, which started on the 1st of Jan. But if you look at this data from the September highs, then Indian investors in the markets have seen their wealth erosion by as much as 78 lakh crore rupees and counting. Now, what seem to be some of the key drivers driving this downturn? First, of course, a story that we bring you every day, and that is to do with Donald Trump's tariff threats. Remember, just this morning we brought to you the news report that the BRICS nations, which includes India, could face a 150% tariff from the US if there were any attempts to de-dollarize and come up with a BRICS currency. Now, what is driving India's real exodus on the Dalal Street is the FII pullout. FIIs, the foreign institutional investors, have exited India, and that's because of a strong dollar and the dollar index reaching its new highs. As much as $25 billion have been withdrawn since September. The fund manager's allocation to Indian equities is at a 2-year low. Meanwhile, India's own domestic problems also continue to be an irritant for market participants. India's GDP growth projection at 6.4% has come in, and that seems to be the slowest it has been in 4 years. Now, inflation continues to hover above the 4% mark despite the RBI going ahead with a 25 basis point rate cut earlier this month. Corporate earnings too have been disappointing, just an average of 5% profit growth by the Nifty 50 companies. So all these are weighing in heavily on the Indian markets. Joining me this morning is Kranti Batini, equity strategist at Wealth Mill Securities. Kranti, good morning. Thank you so much for being here with us on News 9. And what a bloodbath we are seeing again on Dalal Street this morning. Take us through how should investors deal with this downward pressure on Indian markets that they wake up to day after day?
Karthik, good morning to you. As you rightly mentioned all the points, and you highlighted the key points for this downtrend in the market. But Karthik, just to emphasize how to deal with the bear markets, definitely we're in a downtrend, and last few years investors have been embraced with more about the mid and small cap stocks into their portfolios. and mid and small cap stocks were the flavor of the market in the past 24 months and all. So one need to understand before investing in any kind of mid and small cap stocks, the nature and the behavior of these mid and small cap stocks. They are high beta in nature, and they will respond to the greed and fear in the same way. Whenever there is an uptrend, these stocks tend to outperform, and whenever there is a downtrend, and what we are witnessing is a complete downtrend in the market, and these mid and small caps tend to underperform during these kind of phases. So whenever any investor is investing in a mid and small cap space, one need to be ready. These kind of extra volatility they need to embrace while investing in these mid and small cap stocks. And one thing is, at this point of time, the quality should be the template for the investors.
Right.
If the mid and small caps is a wider universe, not like the large cap universe where it comes with the Sensex 50 companies or the Sensex 30 companies or Nifty 50 companies, but whereas the mid and small cap universe is a very large, vast universe. Right. And in the past 24 months, not even mid and small cap investors, many of the investors went on to pick up the micro caps and SME stocks. These are the talk of the town.
Kranti, would it be fair to say that this is the froth in the small cap space that the market regulator was talking about a few months ago? And is it fair to assume, though the market regulator said that there's no need for the regulator to comment, but as an equity strategist, do you feel this is the froth that was there in the small cap space? And do you believe that this froth has now been taken away?
Karthik, you're absolutely correct. Okay, there is definitely froth in the mid and small cap space, but to make a point, there are some pockets where the froth has built up in the system. Okay. But there are some quality companies are there which are available at a fairly valued, and also we also need to give the valuations are related to the future growth also. When there is a clear-cut earning visibility and a strong order book, and management have the clear-cut execution capabilities, those kind of stocks which have the quality. But there are some stocks where they don't have any business model, okay, just rising on the sake of the news and the market mechanism. That's where the concern area, that's where the froth comes into the picture. So out of 100 companies, mid and small cap companies, there are some pockets, there will be a froth. That is the reason investors need to be very stock specific and sector specific while picking up the stocks in this mid and small cap space.
Okay. Kranti, is it fair to say at this moment that we are definitely in a bear market? Can we assume now with some degree of confidence that this is indeed a bear market and there is no upside in the foreseeable future?
Karthik, here a couple of factors we need to consider before defining this is a bear market case.
Okay, how do you define a bear market? Just for all the viewers watching us, what exactly is a bear market? Because they are seeing wealth erosion for the last 5 months and there seems to be no end to it. So what is a bear market technically?
Typically, bear market is a period where the stock prices got corrected and the volumes are low and there is no activity in the market for a prolonged case. You can say a couple of quarters, okay, prolonged case can be defined as a bear market. What I can sense at this point of time, it is a downtrend in a bull market case, because India is a country where, as you mentioned, that the GDP is at a 4-year low, but still we are a fastest growing economy in the world. And also the corporate profits witnessed last 2 quarters some kind of a softening of the growth and softening of the profitability. So due to these global factors and domestic factors also, we are witnessing through one kind of a downtrend. So whether we call it as a bear market, it's a downtick in a classic bull market. So we do witness these kind of downtrends. Whenever Nifty comes below 23,000 levels, there is a kind of some kind of a sense of a bear market that we witnessed in the past 24 months. So I don't think this as a bear market case. It's a downtrend in a classic bull market case, Karthik.
Okay, downtrend in a classic bull market, not exactly a bear market. We'll keep technicalities aside, but what is driving the mood of the market today of all days, Kranti? Is it to do with US inflation data? Is it to do with, again, tariff talks on BRICS nations as high as 150%, which is spooking the markets? Because as I'm seeing right now, Sensex is down almost 0.9%. That's almost a percentage down, almost 700 points down in just the first 20-25 minutes of trading this morning. So what are the triggers for the sell-off today, Kranti?
One thing is market on a closing basis Friday, the Nifty closed below 23,000 level, and also it closed the crucial support zone of 22,800, 750. That was the crucial support zone for Nifty. With the global cues, the downtrend in the US, that has created some extra pressure on Indian equities. So that is the reason on a Monday morning we can see selling pressure that emerged in the large cap as well as mid cap space is concerned, Karthik.
Okay.
And the foreign portfolio has been the unprecedented sell-off mode.
Right.
And they sold for a tune of more than a lakh of crores during this phase of this downtrend. So that's the reason for creating the extra pressure on the market. And whenever in a downtrend, what happens is the psychology or investment attitude of the investors, they normally the investors who joined in the equities in the recent past, they will be always in a wait and watch mode, or they tend to sell. That's the attitude or the psychological mood of the investor.
Right.
That's where that causes the extra pressure on the market.
Right. So, Kranti, I want to understand, and there's a question that I think every trader, every investor out there wants an answer to. Kab tak? How long is this pressure on the markets going to continue, and how long will investors have to continue bearing this pain of seeing their wealth erode? Is there a timeline you can put? Is there some study, some research, some analysis, some data from history that you can throw to help investors understand how long are they expected to deal with this pain?
Karthik, one is the news flows. Okay, in terms of the technicalities are concerned, it seems to be the markets are in a oversold zone, and it seems to be looked at the bottom. But nobody can't figure out the exact bottom for the markets always. What happens is when the slew of negative news or the foreign portfolios have investors have been unprecedented way when they are selling, okay, there will not be the bottom. Figuring out the bottom should be very difficult. But as per the levels and technicalities are concerned, this looks like to be a bottom at this point of time. The valuations are entering into a fair value zone at this point of time. So once the global cues set right, when the stability in the global cues emerges, not only Indian markets, look at the way US markets have taken a beating on Friday night. That's creating some kind of a extra pressure, the global markets, and also the Asian cues also looks this morning in a negative territory. That was creating the pressure on the market. As for the Indian domestic fundamentals are concerned, we are at a right way. We are at on track at this point of time. The corporate profits, despite of the slowdown in the first couple of quarters and the third quarters, even though it's not enticed the market, we have not witnessed any kind of a negative signs in terms of the corporate profitability are concerned. Yes, I completely agree with you. There is a slow pace of growth, but definitely and when we interact with the managements, they're quite sanguine about the next couple of quarters, how the things are going to be. So that's where the markets are positioned at this point of time. I'm sure there will be a sudden recovery in terms of the market and stock prices are concerned. And Karthik, when this kind of downtrend comes, this is where the opportunities emerges. Okay, this is where the margin of safety tend to go up in majority of the stocks. So on a longer term perspective, if the investor have a horizon more than 1 to 3 years, this is the best time to chip in into the Indian markets, Karthik.
Okay, best time, but people who are watching the screens right now may not think this is the best opportunity, with Sensex down almost 1% in trade, well below the 74,600 mark, now trading at 74,562. And look at the Sensex heat map on your screens now, and this is what it looks like. It's a sea of red. You've got the banking sector, you've got the IT sector, and you've also got the heavyweights including Reliance and Bharti Airtel in the red this morning. Even Even the power corporation companies, Power Grid, NTPC are down. The only thing which is showing a little bit of resurgence today happens to be the auto space, with M&M up about 0.8%. Remember, this is coming after the lows that it had hit on news reports of Tesla entering the Indian market with its slew of EVs. There's a good recovery in Sun Pharma also this morning. Sun Pharma is up about 1.3%, which had taken a beating after the tariffs on the pharmaceutical industry were mentioned by Donald Trump, the President of the United States. Kranti Batini, I want to come back to you with one final question on the show this morning, and this is to do really with the sectors that investors should watch out for, and perhaps a sector or two that they should be bullish on in this, what you call a slowdown, a downtrend in the bull market and not exactly a bear market. Which sectors should one be wary of, and which sectors should one become a little bullish on right now?
At this point of time, because of the market is dominated by the global fears at this point of time, the news flows that are coming from President Trump has been weighing more pressure on the market at this point of time. Look for the domestic centric sectors at this at present, like the healthcare, which looks very attractive to us, and also infrastructure, the domestic consumption. These are the themes that are going to play a safe play at this point of time. If the investors have a high risk appetite, one can look the IT, because even though the stocks are going through a downtrend, once the US is in a uptrend, that's the main reason why when the dollar get appreciated, that is a positive impact on the IT companies on a medium to longer term trend. And also, if the US is expanding, definitely IT budgets are going to go up on a medium to longer term basis. So one can start picking IT stocks also, despite of this kind of a negative news that are coming into the market at this point of time. Investors have a 1 to 3 years kind of horizon. Definitely they can pick. And banking and financial services stocks also, they are more about domestic in terms of the growth, but they are more prone to the global flows. So one can pick up stocks in the banking and financial services also for a medium to long term. And defense, which is more about the domestic theme, India's defense companies from the net importer, now Indian defense emerged as the exporter. So defense is by and large a domestic theme. So these stocks have corrected from the high around 30 to 40%. So for a longer term basis, one can start picking the Indian defense stocks also. They have a strong order book and clear earning visibility.
All right, Kranti Batini, let's leave it at that this morning. Thank you so much for joining us on this very crucial day when markets are tanking, and thanks for giving us all the reasons behind those. With that, we will slip into a break, but first up, a look at some of the other headlines in news this morning. Virat Kohli's batting innings leads India to victory against Pakistan in the ICC Champions Trophy. Anand Mahindra applauds Kohli on X, calls him the chosen one. And the India-Pak match turned out to be a blockbuster for the new JioHotstar platform with 60.2 crore concurrent viewers. That's 20 times higher than the previous high of 2023 India-Pak match on the predecessor Disney plus Hotstar. Prime Minister Modi lauds the role of youth in AI and space sectors in his Mann Ki Baat address on Sunday. Also says India must reduce its edible oil consumption. And amid continued economic headwinds, cautious salary hike for IT employees this year. Experts predict hikes between 4 to 8.5% for IT companies. A reported bomb threat makes New Delhi-bound American Airlines flight to divert to Rome, escorted by fighter jets of the Italian Air Force. And it's IPO season. We will bring you key dates to look out for in this week's IPO launches. And there's been some positive impact of the repo rate cut by RBI earlier this month. Bank of Maharashtra cuts interest rate by 25 basis points on loans. And despite job cuts across the world, Meta to expand its India operations. New office in Bengaluru to come up. UK-India trade deal, Jonathan Reynolds to meet Piyush Goyal. We bring you all you need to know about the India-UK free trade agreement. All this and more on the other side of this break.
मैं और आप एक जैसे ही तो हैं। एक बार मंजिल दिख जाए
One shot of a century.
तो उसे पाने के लिए हम अपने कदमों को नहीं रोकते।
That looks out.
पर कभी-कभी मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा। दिल बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। साथ खड़ा है। गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap. Kick it hard in the booth. Chuck, there for the ball. Shaka 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 there for the ball.
Welcome back. After nearly a year-long pause, India and the UK are set to resume negotiations on a free trade agreement today. British Trade Minister Jonathan Reynolds will travel to New Delhi to meet his India counterpart Piyush Goyal. The two nations had launched talks in Jan 2022 and held 14 rounds before pausing ahead of elections in both the countries. Now let's look at the progress that has been made so far on the India-UK free trade negotiations. Now 13 rounds of talks have been completed as of December 2023. The 14th round, which began on 10th of Jan 2024, as I told you, was paused in May 24 due to elections in the US, followed by India elections. Now, what are the objectives of the free trade agreement between India and the UK? Well, now number one on agenda is boosting bilateral trade and investments. India and UK both want to eliminate or reduce custom duties on traded goods. Now, there are certain demands that India has of the UK, and among these, the most critical is greater access for skilled professionals in India's IT and healthcare sectors to find access to UK, and of course, market access for Indian goods with zero custom duty. Meanwhile, there are demands from the UK as well, and these include lower import duties, especially on Scotch whisky, which attracts 150% duty at present, plus lower concessions on electric vehicles, lab meat, as well as chocolates and confectionery items. But that's not all. UK also wants investments in multiple sectors, which include telecommunications, legal services, financial services, including banking and insurance. Now, just to bring you up to date with the trade between India and UK, bilateral trade between India and UK for the year 23-24 stood at about $21.3 billion. On an average, UK import duty on Indian goods is at about 4.2%, and UK continues to be India's 6th largest trading partner. FDI from UK for the April 2020 April 2000 to September 2024, for almost a 25-year period, stood at just $35.3 billion. And finally, before we come to an end, the primary market continues to be abuzz with 3 new public sector offerings this week, 3 new IPOs, and these include HP Telecom, Swatch Food Tech, and Bizasan Explortech. These will close their public issue in the coming week. Apart from this, 5 IPOs are likely to make their market debut on both BSE and NSE this week, and these happen to be from the SME category. Nucleus Office Solutions IPO will open on the 24th and be open until the 27th of Feb. Then you have Srinath Paper IPO from the 25th to the 28th of February. You have Balaji Phosphate IPO, which is likely to start on the 28th of February and close on the 4th of March. Well, that's all we have time for on this edition of Morning Brief at 9. News continues right here on News 9. Thanks for watching.
In India, 1.4 million cases of cancer are detected every year. We at News 9 Plus set out on a mission to create awareness and empathy